Hey guys, today we'll be talking about trading reversals. But first, before we go into the video, I want to give a shout out to all of you who have been watching my videos, sharing my videos, leaving your comments, your likes, subscribing to my YouTube channel. I'm so grateful. I'm so grateful, guys. You see, when I began this journey, it felt like it was going to be impossible. But with your relentless efforts and your cheering on through your likes, your subscribes, your sharing, it has become very possible for me to keep putting out these values out there. And you know what is driving me to making these videos is you all. I want you create a community where we all learn, grow at our own different pace, right? Breaking down complex concepts into simpler forms where anyone could learn and grow, right? And my objective is that at the end of the year 2026, many of you would have been professional traders by then, right? So please keep subscribing to the channel, keep sharing to your loved ones, um, like, leave your comments, right? And if you wish to communicate or reach out to me with questions, my Discord channel is there on the YouTube, so you could just join my Discord, and that would be amazing to have you all join. So on today's topic, we're going to be talking about trading reversals, right? A lot of people have come to ask me, how do I know when the market is going to reverse? Why did I position my trade there? Why did I, did I feel comfortable taking a long from this position or taking a short from this position? The answer to that question is understanding key concepts about reversals in the market, right? And this is a very complex topic, but I'm going to be breaking that complex topic into a very simple model that you could follow. Anyone out there could follow this model, and in no time, your trading is going to be improving drastically, very drastically. Okay, so the key highlight of today's video is we are going to be defining what market reversals is all about. We are going to be talking about the core elements of finding reversals. We're going to be also giving chart examples as well. Okay. Yeah. So let us go into the definition of what a market reversal. Stay with me. Grab your pen, your notes, and let's dive deep into this um complex topic of reversals. A market reversal is defined as a change in the market sentiment or trend. It could be from bearish to bullish or from bullish to bearish. So the market was in a we had a bearish market structure, and then we reversed from being bearish to bullish, or we could have had a bullish market structure, and then we reversed from being bullish to bearish. That change in the market sentiment or trend is what we regard as a market reversal. This shift in market structure occurs every time in the market. It occurs every time in the market, but the ability to spot when it is a false change or the true shift in market structure is what makes or distinguishes professional traders from non-professional traders. You know, in a in a bullish market structure, we are taking out lows and breaking highs. There will be times where market will put up false reversal moves that will make traders go in to start shorting the market. If the market was bullish, okay, start putting on false bearish moves. Whereas that bearish move was just to take out a low and price continue trading higher. When you cannot recognize this difference and knowing when it is false or true, you would end up losing a lot of money in the market and being the liquidity for other traders. But your ability to spot when it is false and when it is a true shift in market sentiment is what makes you stand out as a trader. Okay, so the core elements of finding reversals. This has nothing to do with indicators like RSI, moving averages, and every other indicator you have been taught to believe and apply in your charts. Now, am I saying that those things don't work? Probably they don't. I don't know. But I'm just going to simplify simple concepts that you can apply to your advantage that would help you spot when to be in a market for reversals and when not to be. Okay. So it's not about RSI or moving averages or Bollinger Bands and all of those complex indicators. We don't do that here. Okay. So the question now is, so what are the things I should look out for if I'm not going to be using RSI and other indicators as I have been taught to? What am I going to be using to spot when this shift has begun in the market? I have outlined few elements of finding reversals, and number one, understanding key levels. And disclaimer, I am not saying this is the perfect way it must happen, but I'm basically just giving you a template to work with, to go into your charts and backtest and study, and you would see how understanding this concept is going to make you a better trader over time. So the first thing you want to understand there is key levels. Then you want to understand liquidity. They want to understand what daily ranges are. They also want to understand what a premium and a discount level is. Then you also want to understand what a lower time frame change in the state of delivery, CISD, is all about. They want to understand the most crucial of them all, which is time. Time, when to and when not to. Okay, it's not just about when to, but also when not to. But for this video, I'm going to be simplifying this key concept in a very, very simple manner. And then we're going to go into the charts and I'll show you live examples as we go further. So the first thing we want to deal with is understanding key levels. Key levels are simply PD arrays formed at higher time frames. They are considered key levels because of the time frame they were formed. Okay, so what qualified them to be a key level is the time frame they were formed, nothing else. All right, they are the usual PD arrays you know about. In this series, I have taken my time to teach about the most important PD arrays I think any trader should learn and understand to get them from a beginner to an expert trader. And I highlighted highs and lows. I highlighted order blocks. I highlighted fair value gaps, and I highlighted breaker blocks. These 5 PD arrays are the most important PD arrays I think any trader could learn. It's not about learning all the PD arrays, it's about applying the most important PD arrays to your charts that will inform you better and make enable you make faster decisions. Right? You don't want to be confused in the market. You want to have definite information that can make you make definite decisions at a shorter period of time. Okay. So key levels are a function of the type of trader you are. So let's say I'm a day trader, right? Or I'm a scalper. I have no business considering 4 hours as my key level. So subsequently, I'm going to be releasing a video on time frame alignment. Okay. So that you could know the time frames you should focus on depending on the type of trader you are. All right. So key levels are a function of the type of trader you are. However, the most prominent time frames regarded as key levels are the 4 hour, the weekly, the monthly, and other higher time frames. So quarterly and all of that. Okay. To your right, you see an image where I highlighted this order block that was formed on the daily time frame. Okay, because it was formed on the daily time frame, it is regarded as what? A key level. Okay, so the next question we're going to be talking about now is liquidity, right? Liquidity is simply referring to highs and lows. I have a video talking about liquidity in details. You might want to check that out in the series. Okay, the liquidity written above highs are called buy side liquidities. The liquidities written below lows are regarded as sell side liquidities, right? For more information on that, you want to visit the videos on the video I made on liquidity. I explained in details what this liquidity is all about. Okay, so understanding daily ranges is also a very crucial matter to spotting the right reversals. A daily range is formed when price runs out of both buy side and sell side liquidities simultaneously, creating a range from the low to the high for bullish case scenarios and from the high to the low for bearish case scenarios. On your right is an image depicting what I just said now in a more clearer form. The range between that high that was taken out and the low that was run out immediately at simultaneous this lows this high and low was taken out simultaneously. Okay, the the range between the high to the low becomes the daily range. Okay, so that is what the daily range is all about. I've highlighted this in my videos subsequently over time, so you just want to go there and see it for yourself. Okay, and during our live examples, our chat examples, I'm going to be showing you more example. I'm going to be showing you what a daily range looks like also as well. So, but just have this in your mind that it is formed when price runs out both buy side and sell side simultaneously. The key word there is simultaneously. All right. Understanding the premium and discount range of the market is critical to being comfortable taking reversal trades. So as a buyer, you want to buy at a discount, and as a seller, you want to sell at a premium. Okay. Take for instance, you walk into a bookstore, right? And in this street, okay, let's say you walk into a street, and in this street there are two bookstores available, and you want to get a book, and one of these bookstores sells this book as $50, and the other sell the same book at for $20. Which of these bookstores are you going to be patronizing? Definitely is going to be the one who sells at a cheaper price. That cheaper price is what we regard as discount. And as a seller, if someone is willing to buy the same book for $50 and the other is negotiating to buy the same book at $20, who would you rather sell to? You will sell to the one who is willing to buy at a higher price, which is premium, right? So as a seller, you want to sell at a premium. Now, above 50% of the range is premium, and below 50% of the range is discount. So on the image to your right, you see the red shaded area, which is premium, and the green shaded area, which is discount. Liquidity is resting above 50% are buy side liquidities. Liquidities resting below 50% are sell side liquidities, premium, discount. Okay. So the next thing we want to talk about is the lower time frame change in the state of delivery. Because you see, no matter what you see prior to this, your your idea is not confirmed until you've seen a change in the state of delivery on the lower time frames or on the entry time frames you work with. Okay, so the lower time frame change of delivery. A change in the state of delivery confirms the switch of trend from the former trend to the new trend. Okay, so if we are bullish, if we are bearish, and we have a bullish CISD, then we have shifted sentiment from bearish to bullish. And if we were bullish and we have a bearish CISD, we have shifted sentiment from being bullish to bearish. And this CISD is characterized by price closure above the last bullish candle for buys and the last bearish candle for sells. So basically when price creates an order block in that becomes your CIST. Okay. And now the most important concept, time. This concept of time cannot be stressed enough. It cannot be stressed enough. No matter what you have before this, you can see I use the golden color for the headline because this is the key. Time is the wheel of the market. Okay, the time is the wheel of the market. I have made a detailed video on time in this series. Please go through the video to understand what we are saying here. You want to understand what kill zones are. What are kill zones? We have different kill zones on the Asian, the London, the New York, and the New York PM as well. This is a concept taught by ICT. So shout out to ICT, right? You want to understand what kill zones are. So we have the Asian session kill zones, the London session kill zones, the New York AS session kill zones, and the PS session kill zones. Okay. You want basic. How do you apply these kill zones to reversals? You want to see a reversal occur during these kill zones. Those reversals which occur during kill zones, during a session kill zones or time or kill zones in particular, is what gives you an edge. It's what confirms a fake reversal from a bullish, from a true reversal. Okay, so time is very important to this concept, and you want to go to your charts and apply what will be taught to you in this video for deeper understanding. Okay, we anticipate kill reversals to form at the session kill zones. Above the daily open, we want to be selling, and below the daily open, we want to be buying. Okay, so we have different key true opens. We have the weekly true open, we have the daily true open, we have the session true open, and we have the cycle true open. Shout out to Daye for teaching this, and as well as seeing other prominent traders in the space talk about this as well. Okay, so the weekly true open is on Monday, 18 o'clock. The daily true open is every 00 o'clock New York time. 00 o'clock New York time is the daily true open. Okay. The session true opens, we will discuss this in our next video. Okay. Thinking about it now, I know that I need to make a video for this so that I can explain this in details. So if you agree with me, please leave a comment saying yes, so I could see how important this concept is to you guys, so that I can take my time to make these videos. Okay, this video about time, about kill zones, true opens, and all of that. I have shared very important concept about time on this series. Okay, but we're going to be sharing more advanced topic about time subsequently in the series. All I just want for you guys is to show me that you really need a video explaining this by commenting yes. Okay, and when you comment this yes, I'm going to be motivated to make this video, and I promise you I'm going to be pouring my heart out into the video so you could understand this the core concept of time and how it is applied in your everyday trading. Okay, and if you understand time, you are 70% through to becoming that dream trader you dream of. No jokes. That's the truth. Because understanding time will tell you when to be in the market and when not to be in the market. More importantly, when not to be in the market. Okay. And this is going to help your psychology grow as a trader. And the more you understand these concepts, the more you become very, 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 very profitable as a trader. So without further much ado, we are going to be diving deep into chart examples to explain this concept. I'm going to be doing just 2 examples, and already I have the images of this example spread out in the video, so it's not going to be a surprise, but I'm going to just be explaining deeper what to look out for when you see patterns like this print out in the market while applying logic, right, to your charts. Everything works with context. Every pattern you study works with context. The moment you have the right context, you are good to go. So without more further ado, let's go into live charts examples. So our first example is going to be a bullish case scenario where we had price putting on a reversal show from Tuesday 13th of January 2026 up until Tuesday the 20th of January 2026. So you could see this is a recent price action. Okay, and this is very important because this will highlight it perfectly what we are talking about. So the first thing we want to look out for is key level. Where has price traded into? That's the first question you want to ask yourself. Where has price traded into? Price traded into this daily order block here. And this is a key level. Why? Because it was formed at the daily time frame. So this is a discount array formed on the daily time frame. Okay. And the second question we want to ask is in the daily, what is the daily range? So we have price running out these buy sides written above these highs, right? And then price, after running out these buy sides, came back and took out this sell side written above these lows as well, right? Now the dealing range is from this high. The new dealing range is from this high to this low currently. This becomes the new dealing range. Once you've been able to spot out the dealing range, you want to find out in this dealing range, are we at a premium or are we at a discount? To do that, we are going to be using the Fibonacci toolbar. So if you don't know where it is, you want to go here, Fibonacci retracement. And my Fibonacci just has very simple setup. Okay, so we want to set your own up. I turned off all the other values, leaving the 0, 1, and 0.5. And this, you would actually screenshot this if you want to just mark out your premium and discount level. Okay, and then I use the background, turn on the background. One for red, this for green. Okay, no, just basically it. That's just it. Okay, so to find out if we are in a discount or a premium, we want to draw Fibonacci from this range high to this new range low here. So judging by what we said, right? Are we at a premium or are we at a discount? Certainly we are at a discount. Anything below the 50% of the dealing range is discount, and anything above the 50% of dealing range is the premium, right? And Now the next question we want to find out is the price sweep liquidity. That is the next question you want to ask yourself. Okay, so taking out this buy side and sell side liquidities created this new daily range. Okay, but we want to get in on the market. We want to join this reversal. This big candle was formed at Wednesday, 21st of January, 2026. So let us investigate how we could have participated in this reversal on this particular day. Okay, let us investigate how we would have participated on the reversal on this particular day. So first off, we want to highlight something very important here. To reiterate, we just traded into a key level. We have a new daily range, and we are at discount of the new daily range. Okay. Now, what we confirm this reversal is if we have price close above this last bearish candlestick, which we had here, which becomes our change in the state of delivery. But for someone like me who is not a swing trader, right? I would participate in this. My bread and butter is in this candle here. I want to participate in this candle, in this bullish reversal candle here. And we're going to be dropping down to a much lower time frame, the 1 hour time frame, and then we'll drop to the 15 minutes time frame to investigate how we could have participated in this move here. Okay. So now let's jump to the 1 hour time frame. On the 1 hour time frame, we have this key level here. Okay. This is the dealing range we are dealing with currently. Price ran out this buy side here, came back, run out this sell side. And this is the new dealing range from this high here to this low. Now let's investigate what price, how would have participated in this price action. So first off, we want to mark out the previous day's low, which was Tuesday. Tuesday began at 00 Monday, Tuesday 00 o'clock, which is the true day open, right? And ended at, let's use 00 o'clock. So this was Tuesday's first action. So this is the high of Tuesday, right? And this is the low of Tuesday. Okay. Now, this reversal began on Wednesday, the 21st. So we want to participate, we want to join, we want to enter the market on Wednesday. We did not participate. Let us assume that we did not participate in price action on this Tuesday when price traded into this key level. And we want to spot the reversal from the 1 hour time frame. Already with this 1 hour time frame, we can explain everything we want to explain here. Okay. But I will also drop down to the 50 minutes time frame to show you that price is fractal. The same thing that occurs on the 1 hour time frame can be replicated on the 50 minutes time frame as well. Okay, so on the 1 hour time frame currently, let's look at what price did there. So Wednesday began at 00 o'clock. I wanted the opening price for Wednesday at 00 o'clock. The opening price was, and I want you to pay attention to this here. The values here. So we're dealing with the opening price here. Opening price was 6819.9. 6819.9. So we want to mark that out. Okay. This is the true day open. This is the daily open. Okay. 19.9. I hope you've seen this. Okay. Now, what did we say about participating in buys in bullish reversals? We want to be participating in bullish reversals below the true day open, and we want to participate in bearish reversals above the true day open. That is time. Okay. And then this reversal began at the New York kill zone, which is from 8 o'clock for me, from 8 o'clock to 11 o'clock. This is my New York kill zone. 8 o'clock to 11 o'clock is my New York kill zone. And you can see that. And period to the kill zone, New York kill zone, price was putting on this bearish candlestick. And what do you think this was? This move was? This move was a manipulative move to deceive traders into shorting the market. So we have people shorting the market. We have this value gap here, bearish value gap here, put on here. And many people would have participated in taking shots here. It has stop losses above this high or above this high, right? So period to the kill zone, you could see that what we had was manipulation. So if you have not watched my video on order flow, please go and watch it. You have accumulation. We have the manipulation. Then we have the distribution. Right? Now we want to participate in the distribution phase. Right? We want to participate in the distribution phase. So what the price do here? Price came, swept previous day liquidity. What is resting below the lows of the previous day? Sell side liquidity. Right? So first, key level, daily order block. Second, liquidity, price sweeping the previous daily low, right? Dealing range, we are discount compared to the dealing range we're dealing with. We are discount even compared to this minor dealing range here, right? So we have internal to external range liquidity. So compared to this daily range we have here, we have price put on this high here, swept out this high, price came and swept this low simultaneously. If we use our Fibonacci, drag from this high to this low, are we at discount or at premium? We are discount. Anything below 50% is discount. Okay. Since the change in the delivery was confirmed when price closed above this last bearish candle here, this was the change in the stop delivery. Okay. And what the price do? Price retraced into this other block, and we saw price trade higher from there. Reversal complete. Time, kill zone, 8 o'clock to 11 o'clock, kill zone. Daily range, we are discount, key level, daily order block. Time, below through the open, and doing the New York AM kill zone. And we have price reverse, tap into the CISD order block, and price trade higher. Now, let's drop even deeper to the 15 minutes time frame to find opportunities where we could have positioned ourselves even more, even better. Okay, 15 minutes time frame. So here we are on the 15 minutes time frame. Okay, so it's even more clearer here. So we have the dealing range from this range high to this range low. Okay, price is what is fractal. The same thing that occurs on the 1 minute time frame occurs on the 15 minutes time frame, occurs on the same reversal signatures you see can be trusted in all time frames. Okay, so I want you to look at this chart here and what can you see before I begin to mark up the charts. I'm going to give you 2 minutes to investigate the bearish arrays, premium arrays that we violated during this move up, and how price retraced into the discount arrays to sponsor the move higher. I know many of you did not pause the video, but we are going to. I'm going to give you 2 minutes, or I'm going to give you an opportunity to pause the video again. Okay, so if you pause the video and you took out time to investigate, good for you. But if you didn't, still good. We are going to be diving deeper into this now. So now look at this. We had price put on this big bearish candlestick here at 6:45 a.m. Then we had price range here. This range occurred until the New York kill zone, which begins at 8 o'clock. Remember, this is relative to me. So if you go out there and hear a different kill zone, that could be true as well. But this is my kill zone. 8 o'clock to 11 o'clock is my kill zone. I look for reversal setups within these time frames. Okay, so we had this 8 o'clock open up here. We saw price trade, swept this liquidity here, resting up below these lows here. Okay, and as soon as price swept this liquidity resting below these lows, you could see price traded above. Look at the emphasis on the 845 candle here. Here, the 845 candle, we have price put on a failure swing as well. Here, we have price put on this failure swing as well. And as soon as price closed above this last bearish candle, that created this failure swing. What is a failure swing? This low, this action, this price action here was meant to take out this sell side liquidities resting below this low. But as you could see, price did not take it out, which could have created an SMT on the other pairs that is correlated with the SP 500. Okay, but as soon as price closed above this last bearish candlestick here, this became our change in the state of delivery. Okay, this was the first change in the state of delivery that occurred, and it occurred at a very specific time at the 8:45 to 9:15 macro. So we have what we call the macro time, the last 15 minutes of the previous hourly candle and the first 15 minutes of the next hourly candle. HT says is the next is HT is the author of this, and he uses the 10 minutes, but me most times I use the last 15 minutes and it works just fine. We got 10 minutes or 15 minutes works fine. Shout out to Zeus for this insight. Trust me. And I want you to see as soon as price closed above this last bearish candlestick here, what was created here? An order block, right? Now I also want you to see the next level of change of delivery here. Price closing above this bearish fair value gap, which changed this fair value gap to an inverse fair value gap, right? As soon as price violated this bearish value gap, this became the second stage change in the state of delivery. This confirms that we are going to be bullish, right? And we see price violating this as well here. So why didn't price trade into this inverse value gap here? Is because price used this other one here. And I want you to pay attention to how price reacted off 50% of this gap here. Price didn't even trade into it. This is a strong bullish signal, right? And then we have price come back to take out this. Okay. We have price come back to take out these highs here. What was resting above these highs? Buy side liquidities. Now, this is the market structure shift on this time frame. Okay. So we had the first stage of CISD here, second stage, third stage, and we have the fourth stage. Even here, we have this breaker here. We have this breaker here, right? This consecutive bullish candlestick before price manipulated and took out these lows here. This became the breaker. I've made videos on breaker block as well. So I want you to see how price printed bullish signatures all over the charts during the time we're expecting the reversal, below the trade open, and after reacting off a key level. And remember, we are at discount in the dealing range. And what do we see price do? Price went on to take out all the buy side liquidities resting above all these highs. So this is a perfect example for a bullish scenario, and I'm going to show you one more example for a bearish scenario, and we'll call it a day. So this is a bearish case scenario. I'm going to be investigating price action from the Friday 7th of November 2025 down to Thursday 13th of November 2025. So you can see that prior to this price action here, price was putting on a bullish move, trapping bullish traders into believing that we are looking to take out these buy side liquidities resting above these highs. Whereas price trades into this key level, what is resting here? A daily fair value gap and this other block here as well. Okay, so let's investigate further. Okay, so let's find the daily range for this price action here. So we have price take out this low here, right? And price simultaneously took out this high. The high, the low that created the high was swept. The low that created the high was swept. And the high that was formed was run out almost immediately. Okay. That created the dealing range from this low to this high here. Now, if you take this Fibonacci from the high to the low, you will see that we are at premium. Anything above 50% is what? Is premium. Anything below 50% is what? Is a discount. So daily range, we are premium, right? We are interacting with a daily order block, which is a key level, right? So let's drop down to the 1 hour time frame to investigate further how we could have participated in this reversal. Okay, so we're going to drop down to the 1 hour time frame now. Okay, so dropping down to the 1 hour time frame, we could see price interacting with this key level here. And this reversal began on Thursday, right? Oh no, it began on Wednesday, 12th of November. That is when this reversal began. Okay, so let us investigate my prices fractal. The dealing range, we have price this low, create this high, creating this low. So we have price come, sweep this low, right? Sweep this low, and the high that created this low was eventually run out simultaneously. Okay, so we want to find out, are we at premium or discount in this on the 1 hour time frame? Or you saying how this is basically a video on top-down analysis already. So we have premium. We are at the premium compared in the dealing range from this high, from this low to this high. We are premium, right? Now we want to investigate what was the daily open of Wednesday, 12th of November. So we have the daily open at here. Remember, focus on these values here. So the day opened at 6867.4. So this is the daily open. Okay, the true day open. Now, are we above or below the true day open? We are above it through the open. And investigating from 8 o'clock to 11 o'clock, which is what our Q zone, right? This is my Q zone, right? We are above daily open for time, and we are also in our 8 to 11 time New York AM Q zone. And you could see that the change in the state of delivery was confirmed when price, remember, price came, swept this high, okay, swept this high and created this failure swing, which could be an SMT on other correlated assets, okay. After price put on this failure swing here, we had price close above this big bullish candlestick here for the change in the state of delivery. And we had price trading to that other block, and we saw price trade lower. Okay. Then we have the new day open at Wednesday here. We had Wednesday open. Okay, Thursday open at 00 o'clock. Yeah. Interacted with this 1 hour fair value gap. You could see here that was formed during this reversal leg lower. And that was the premium array price used to send market even lower, taking out all the sell side liquidities resting below these lows. You will see this little trend line liquidity here. I talked about this on the liquidity video, so you want to go back to investigate that. Okay, so let's drop down to the 15 minutes time frame to even investigate further how we could have engaged with price on the lower time frame. Okay, I could say here is the 15 minutes time frame. Okay, here is the 15 minutes time frame, and we have this price action here. Remember, this is the daily order block as a key level. We have price close above the open of this candle as the change in the state of delivery. This was the first change in the state of delivery. Okay, as soon as price closed below the open of this 2 consecutive bullish candle, this became an order block, and we saw price react, trade into it, and leave it, right? Reject off of it. You can also see this value gap here that was meant to send price higher, but price violated it, right? Creating an inverse fair value gap. This was the second stage of the CISD. Remember, we are still trading inside the Q zone, 8 o'clock to 11 o'clock, and we are above daily open, right? Then we saw price close below this big bullish candlesticks here. This was the market structure shift, and you could see price used this to send price even lower all through the day. Okay, all through the day. You might be asking, why didn't price fill this gap here? Probably an SMT occurred here as well. Fair value gap filled SMT. And you can also see price using this breaker to send price lower. So price left this fair value gap unfilled while using this breaker to send price lower. Okay, so first question, key level. We're on the daily key level. Second question, daily range. You can even look at this fractal daily range. You will see that you were at premium from this low, from this high to this low. Why this low? Price came, swept this liquidity here. Okay, and then broke above this high. This is the high that created this low, right? So this become the new dealing range from this low to this high. Comparative to this new dealing range, are we at premium or at discount? We are at premium. And then we have price put on this failure swing, right? Then we have price begin this reversal inside our Q zone from 8 to 11 above through the open. First stage here, price closed above this consecutive bullish candle for a CISD. Second stage, price closed below this positive bullish candlestick. Then see price closed below this, this family gap here, creating an inner family gap. Then we had this breaker here. Then we have this final move here. And we can see price sent price lower, taking out all the sell side liquidities, resting below these lows. Okay. Yeah. If you found this video insightful, please leave a like, your comment, subscribe to the YouTube channel. If you want to ask me personal questions, directly to my DM. My Discord channel is open for interaction. The link will be in the description below. You can also reach out to me on X, right? And every other social media platform with the links on my YouTube channel already. I hope you found this video really, really insightful as we broke down this complex concept into simple, basic concepts that could be applied to your chart. I admonish that you go to your chart and find signatures like this. They are all everywhere in your chart. And using these kill zones, this is going to give you a clearer picture of what to expect in the market at definite times. You must have observed already that I'm a index futures trader, so my analyses are mostly on the index futures. So if you're a forex trader, comment forex on the YouTube channel, on the YouTube video comments, and I'm going to share how to apply this same concept to forex trading. Until the next video, I wish you a successful week ahead and happy trading. Love you guys.